VAT considerations. Now, again, VAT consideration, there's a lot of considerations for property investors, but again, there is obviously a noteworthy for holiday let investors and service accommodation, and we'll go through that now. VAT for new builds. So if you are building homes to sell, then please note that they are zero rated items. So you do not have to pay VAT for any items that you have purchased. Inevitably, there will be times when a builder or a supplier will charge you VAT, but what you can do, because it's a zero rated item for buying and selling, sorry, for building homes, then you can claim back the VAT. If you're converting properties from commercial properties like shops and offices into residential, then don't forget that you can have a reduction of VAT on that too, from 20% down to 5%. And if you've got property that's been empty for 2 years or more, and that is noted from the local authority, they will tell you it's been vacant for 2 years, then again, any property that's been shut, closed, boarded up, whatever you like to phrase it, then you can claim the reduction of refurbishment from 20% VAT to 5%. You can, of course, get, if you've got a property that was a single let and you're converting it to a HMO, then the VAT on that refurbishment can also be reduced from 20% down to 5%. So that is any property that is a single let property and you've converted it to HMOs with locked doors, etc., then you can get the reduction of VAT from 20% to 5% on any of the refurb costs. Now, before I go on that, especially on the 5% reduction, the tradespeople that you're working with must be VAT registered. So that's the first thing. And they must be the ones that buy the materials and fit it for you. So if you're buying items from LMPG, for instance, they're not going to reduce the VAT from 20% to 5%. You are simply going to have to just take that on the chin. However, if you work with your let's say Magnet, for example, which is part of the LMPG, Landlords National Property Group, by the way, which gives you huge amounts of discounts that on boilers, kitchens, bathrooms, you name it, a lot of discounts from lmpg.co.uk. If you happen to buy your items through there, then what I would always suggest you do is you work with the supplier and give the final bill unlisted, so they're not getting hold of, secret information which LMPG members can't disclose to tradespeople. You say to Magnet, give that invoice to your my tradesperson at 20%, but don't itemize anything. And what will happen is that the tradesperson will reclaim their VAT of 20% in their own bucks, so you don't need to worry about that. But what will happen is that they will charge you just 5%. So again, just to summarize, the tradesperson needs to buy the materials and they will claim back the VAT themselves at 20%, but they will send an invoice to you for labor of fitting it in and all the goods and materials that you've purchased for with an invoice of 5% VAT. Please note that you cannot register for VAT if you're simply doing conversions to hold that property. It's not something you can claim back yourself. You need to do it up front with your tradesperson. And only then will you get this benefit. Now, it's interesting to talk about VAT because that's the reduction of VAT was probably the only thing that we had to worry about. But now, if you think about VAT on single-let HMOs, the rent is exempt. You don't need to charge don't need to charge VAT on your rent at all. However, service accommodation, holiday lets, etc., may be VATable if in the last 12 months that your income has exceeded £85,000. So if it's got to £85,000 in the last 12 calendar months, then you need to register for VAT. And that gives a lot of pressure because all of a sudden you are now having to add VAT to the cost of someone staying in your holiday let service accommodation, which of course means that you are less competitive. And there's two things that will happen. you can charge the tenant or the guest this extra 20% and potentially lose customers by doing that. Or you take on the chin that 20% VAT charge and therefore not pass that cost on, but then your margins will decrease. And that is going to be a sore subject either way. So you need to consider, if you get to close to 85,000, do you stay as you are and just accept that you can't expand your business, or do you go full hog and register for VAT and just find ways of reducing your costs, but accepting that there is going to be a tightening of your margins? So typically, you can get a VAT flat rate of 10.5%, which you will still need to charge 20% to your tenants, but you can have a VAT flat rate of 10.5% for any serviced accommodation holiday lets. And as a bonus for first year allowance, you'll get a discount of 1%, which means you only have to pay HMRC 9.5% of the total rental income, which of course will include the VAT as well. And we'll take a look at an example on that later on. Now, flat rate, unfortunately, does have a connotation of all of your income. Now, typically, as you and I know, that rent is exempt from VAT, but if you mix holiday lets and your normal rental income in one entity, then all of a sudden you could be faced with a larger VAT bill, because now you're going to have to add on VAT to the entire amount of your rental income, which is not a good position to be in. Some of the conditions as well, which you must know, is that your income must be less than £150,000 to join. Now, if you have to register if you register because the rental income is above 85,000, you will have to come out of the flat rate scheme when your turnover reaches £230,000 in the last 12 months. So you can see there that you're only 3 times in your revenue from the £85,000 registration requirement to when you must leave the VAT flat rate scheme at £230,000. So you do need to plan ahead in terms of what you will do with this flat rate scheme, how it will benefit you, and what you're going to do if your business then increases so much that you then leave the VAT flat rate and you have to pay to HMRC the full amount of 20%. Here's an example I want to give you. Is flat rate scheme is all based on your income. So let's take an example here whereby you have £500 worth of single let rent, which you and I know is VAT exempt. However, we must add to that the £2,000 holiday let rental income, which gives you £2,500 total rent. Sadly, VAT of £500 must be added to that, so that's 20% of the 2,500, even though we know rent is VAT exempt. So that still needs to be added on for the flat rate scheme. And then you've got £3,000 total rental income with VAT. £285, which is the 9.5% rate of the 3,000, would then need to pay to HMRC. That's an awful lot of money if you've got a lot of single rent in the same entity. And I'm typically talking here whereby you have a limited company and you are mixing those single let rents with your holiday let. So it's, in particular, you must get tax advice to make sure that you split out your holiday lets away from your single let rents. That is one big advice I would give to anyone. There's always a typical question here. Does VAT increase your prices by 20%? It's a really good question, but what you could do is increase your prices by 15%, so it's not as bad as increasing it by 20% to make you more competitive. It could be less, but you don't have to increase your price to 20% just for the VAT. And you would pay HMRC 9.5%, which is discounted first year rate, which basically means you've got no loss to you. So there's all of this kind of considerations you will need to have if you've got a holiday let business, service accommodation, and you're thinking about being VAT registered. And that's something for you to consider all the way through.